very much, I call it the China syndrome. Those of you that saw the movie know what I'm talking about. If you haven't, why, Google it and get it and look at it. It's kind of interesting. The Chinese have admitted now that they are going to need some corn now. Talk is they're buying it for testing purposes to see how well it feeds, the quality issues, and see whether we slip in any non-GM or any GMO stuff into them. They are really enamored by or like, in other words, our DDGs. There's rumors out now that they're going to buy a considerable amount of DDGs. They've been doing this for a while. I think 2 years ago, or in 2009, they bought 18,000 tons. I think so far this year it's 400,000 or 500,000 tons. It'll be higher for next year. We know of people that are who are in the business that have contracts with China to ship more per month than they did all in 1 year last year. So that may be the caveat that says they buy some corn but also buy a lot of DDGs because they like them or whatever. And the main thing in all this is the psychological aspect of what's been going on. We have thought for quite a while that it's going to matter if but when they're going to buy corn. And I met with my daughter about 18 months ago at USDA with the people that put out the estimates, the WASI report people. And I remember sitting down with the heads of the various departments, and one gentleman had just came back, the head of the WASI came back from China and said, "Jerry, you got to go over there sometime." He said, "It's not a matter if but when China's got to buy corn from us. We just don't know when it is." And I personally thought it would be later this summer, when they they would probably do something. They did it a lot sooner, and they've admitted to buying what the USDA is saying, and other people are saying they're going to buy maybe 10 cargoes, which is 5 times as much as about 500,000 tons. 1 million tons is 39 million bushels, so 25 million bushels, and not a lot compared to the 2 billion that we have left over in that area. So, but the important thing is that they're looking and they're admitting to the fact that not only are we going to have to buy corn, buy soybeans, we're going to have to buy corn. They like to buy soybeans easier because you can. They like to raise their own corn, and it's obvious they're not keeping up with their livestock demand. And plus, their internal prices have gone up. And I have a chart that I follow, and back in 2001, the corn was about $120 a metric ton in China, roughly 125. Depends on what city you want to go to. And just as of April, it was 260. So roughly easily a 50% or doubling of the price of corn in the last few years, in the last 5 or 6 years, 7 years. The important thing is that it really has moved up in the last 4 years. So while our corn has been going down and actually went up, to $7, back down to 3.5 or whatever, their corn has steadily been rising. So there's some out there that think that this move by China and being a centrally managed government, they can say, all right, if you don't sell the corn that you're hoarding because it keeps going up, then we're going to bring corn in cheaper. And from what we can calculate, we're a good source for that. We can provide corn cheaper than anybody in the world right now. That changes as our price goes up, of course, and then we become less competitive again. That's the kind of game it is. But internally, they say they can bring corn into southern China 70, 80 cents a bushel cheaper than they can bring it out of northern China and bring it down. They achieve their purpose of scaring the blazes out of their people, the producers or those holding grain in China, because their internal prices dropped as soon as they heard that price of corn, or that corn was going to be imported into the marketplace. So they're trying to manipulate their prices, and they're telling us in advance that they're going to do so, and they're talking about 1.5 million tons from all sources this year. Next year, 3 or 3.5 million tons from all sources. Basically, they are much more transparent in their dealings now than what they were in the past, not as secretively, but giving us fair warning. So if you're the administration of the United States and you're a farmer in the United States and you're, more importantly, an end user in the United States and for feeding the stuff we produce here and or putting it in the form of energy and ethanol, you know right now that they're going to be in the marketplace. And I guess what they told us last week was that corn at $3.50 a bushel and in the Board of Trade is cheap. We'll buy it if you don't want to use it. So here again, we've got a position where livestock feeders can buy corn, and cattle and hog feeders and cattle feeders can use it and make money doing it, just similar to what we had prior to the big explosion when there was plenty of time for an end user to price $3 corn. If we look at it like deer in the headlights now and don't sharpen our pencils and say, well, I don't really think China is going to buy corn. They'll wait till it's $2.80 next fall. Then we've taken a risk, and I think what this does, it allows us to lose and allows us to win. So we've got to take a look at, as being producers, is what price risk can do to us on the upside, and also as by selling too soon, and we're not being flexible and being able to change our minds when conditions change, and also as the end user to say, I had a chance to buy corn and I didn't do it, and now the economy turned around, and yes, they're buying a lot higher priced meat out there now, and things have kind of returned back to where they were before the bubble broke, and if we can't afford to produce livestock with that corn, then China's saying we'll buy it and we'll use it. So that's a new paradigm shift that's in here, and I think it's good for agriculture. It certainly sets the bar for us to say that there is good support for grain, corn, at these lows that we've seen out here. And if it drops back down in there again, then we have to be very careful that we don't sell the lows. Soybeans have been amazing to me, that they're still hanging in to close to $10 now. And if you go out to 2011, you can sell beans for close to $10, and that isn't bad. So apparently there's enough concern worldwide, notwithstanding South America, that you produce a good crop this year, but if we're going to continue to supply grain for China's appetite for protein and now carbohydrates and corn, maybe we're going to have to give you a price incentive so that you can make enough off of that new acre of incrementally production brought into the marketplace in Brazil that requires $9 or $10 or $11 beans to make it work. Maybe that's what the market's trying to tell us. Obviously, the market hasn't been trading fundamentals for quite some time because they're awash in a lot of things. But maybe this is the new world where $9 beans are really $6 beans of old, and $3.50 corn is really $2 corn of old. So it's very interesting times. The Chinese they are going to whip us around, and we've now had to deal with them being a big buyer of soybeans, and being able to move our markets, leveraging themselves and their buying power with Argentina and Brazil and the United States, and whipping us around. Now it looks like they're going to be doing it in the corn market, and they can buy corn from other places, and certainly if the demand is there, you'll see Eastern Europe producing some corn as well. But the good news is demand isn't going down, and so we have that to look forward to, and hopefully this year as it appears, and that's something we'll have to watch. The market's going to have to deal with, is that with our early plantings, we probably have enough corn now, unlike 1994 when they came in and drove corn to $5. We have enough corn in storage and growing possibly to meet their demands and our livestock and our ethanol business as well. Let's just hope the USDA and the President sees, and the EPA sees the same thing and increases our usage of ethanol on the EPA rulings, which I'm sure they're wondering whether they're going to do that or not, because already there's a lot of talk about how high livestock is. And of course, with China buying corn and ethanol using corn, we now have the livestock, ethanol, and China competing for corn, which makes it difficult for any government entity, Democrat or Republican, to want to be accused of burning food up again in the form of ethanol. So it'll be interesting to see what EPA says, but for right now, it's all about China, and we'll see if that can continue. Technically, again, it looks pretty good. If you didn't look at at what chart you're looking at and at the price, and did typically just a technical analysis of what's happened, looks pretty good. And I'd invite you to take a look at the chart and see where you're at. But again, very seldom do we ever get to be producing a crop what looks like to be in record time, with record yields probably at hand, and being able to sell it at a profit, and maybe to find ourselves being able to do better even later on. And certainly knowing our downside risk down here is, relatively speaking, is probably 25 cents a bushel from here. So with that, we'll see what China says next week, and we'll see if they maybe buy corn and decide to maybe cancel a contract or two of beans, or roll them ahead to next year and hold that market in check. So